Good morning, everyone, or good evening, GM, depending on where you are in the world. We're joined by a very special guest today. We have Parker White from DeFi Dev Corp joining us. As I'm sure everybody listening has been following, there's been a huge craze of digital asset treasury companies, and we're really excited to be working with DeFi Dev Corp and also to just chat more about that, DeFi, the space, and everything else going in between. For those that aren't aware, this is Chris, one of the co-founders of Switchboard. Switchboard is a on-demand, permissionless, customizable Oracle network available on a host of different chains. Parker, I don't know if you want to give a brief overview of yourself, your background, and then we can dive into DeFi Dev Corp. And before we start, we do have to mention, nothing on this is financial advice. Nothing should be interpreted as a recommendation to buy or sell any particular asset. But with that, let's take it away.
Cool. Thanks, Chris. Yeah, so a little bit about my background. I come from the TradFi world. So prior to 2018, I was, working at an asset manager, built a bond trading desk, got my CFA during that time, doing agency trading, commercial paper trading, boring shit. And then got into crypto in 2017, had a little startup on the side with some buddies. And then in 2018, I jumped in full time and joined Kraken. So I was at Kraken for about 6.5 years, most recently as a director of engineering. And that's when I left, along with some other Krakenites and former Krakenites, to do DFDV. So here we are.
Yeah, that's awesome to hear. I'd love to just actually get the story because it's I feel like it's you, Joseph, and a lot of other ex-Kraken people. What made you sort of decide we're going to leave Kraken and we're going to build DeFi Dev Corp?
Yeah, so it wasn't a like a full lift out. So some of the people had already left. Joseph had already left prior, and Joseph most recently was the chief strategy officer at Kraken. But I've been running some Solana validators for about a year at the time, and we started to see the beginnings of some of the treasury strategies popping up. Obviously there's MicroStrategy, but then there was Similar, and then there was a couple of the Solana ones in Canada. And so we're like, hey, let's we can probably do this in the US. And so the way I've told the story is, I think it was like a Thursday when Joseph and I first kind of started jamming on this idea. And I think by Monday that next week, we were introduced to Blake Janover via one of Joseph's friends. And Blake Janover was the namesake behind Janover Inc., ticker JNVR prior. And so that was the organization that we bought with our own money, and then raised the capital into that to, buy Solana and change the name and kind of get everything started. So a whole bunch of things kind of fell into place. It's kind of luck, feel really blessed to just have it work out so quickly. But it was from the date of our first jam session to the change of control event was like 83 days. So we kind of tried to speed run to market, and we've been trying to speed run ever since.
Yeah, I mean, that is just so fast for public markets. I mean, I feel like, most of the audience, are crypto natives. I don't think they appreciate how slow things in sort of the TradFi world move. And to really go from, idea to actually just having that there live in 83 days is massive. I guess on that, maybe you guys can share more about sort of on DeFi Dev Corp, why you guys chose to work on a sole treasury vehicle more so than, your point, Bitcoin or ETH or some of the other instruments.
Sure. So, we love Bitcoin. Joseph was the CEO of the first Bitcoin exchange in Canada back in 2013. So, we're Bitcoiners through and through. But if we were going to launch a Bitcoin treasury vehicle, and kudos to all the guys trying to do it, Mahlers and the Tether guys, or Nakamoto and David Bailey, whatever. But you're going up against MicroStrategy, and that is a massive head start that they have. $100 billion, war chest or market cap. I mean, approaching $100 billion in Bitcoin. I mean, that is like tough to go up against, right? And so the obvious next play is to do Solana. I mean, sure, we could have done ETH, but like, who wants to build something on ETH? So we think the future of DeFi is going to be on Solana. The user experience is obviously, far better. And, you don't have all the L2 liquidity fragmentation issues, and then just like the basically unusable L1. You can see all the metrics. We post them we post them all over the place, but, the community is great about sharing all the metrics, right? Whether it's app revenue or transactions or users or, on basically all the metrics other than TVL, Solana is just dominating the DeFi ecosystem. So we wanted to build on, you kind of want to hitch your wagon to the fastest horse. And we think Solana is in fact the fastest horse. But then to further differentiate between Bitcoin and Solana, to do a Bitcoin vehicle, it truly is a treasury strategy, right? You take Bitcoin, you stick it on the balance sheet, you do some capital markets activity, right? Sell some convertible bonds, sell some equity, sell some preferred shares, whatever. That's all great. But otherwise, it really is just a reserve play. The asset is just sitting there in a Coinbase account, a Kraken account, what have you. Doesn't do anything for you. Mm-hmm. On the Solana side, it's not really a treasury vehicle. That's the kind of the moniker that we use to just slot it into a frame of reference that everybody is familiar with. However, it's a lot more than that. It's a true operating business. So we've got the validators in the business. So we can stake to the validators. We can get third-party delegation as well to grow our stake. We can do stuff on chain. So we've got an LST on chain. It's integrated across quite a number of the different DeFi players. So Camino and Drift and Radex and Exponent and Orca and boom, 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 boom. We've got our stock now listed on chain, which is probably one of the things we're most excited about. So DFDVX. So you can trade that. There's an Orca pool for it. There's a Radium pool, actually multiple Orca pools, Radium pools. It's being listed every day across, new centralized exchanges as well, which is super exciting. And then we just announced today, actually, we're very excited about this, the DFDV Treasury Accumulator, the Treasury Accelerator. So this is kind of our franchise model. So we'll be helping to bring Solana Treasury vehicles to market in other countries. So all that to say, there's actually an operating business here. It's not just like take the asset and stick it in a vault somewhere and, that's it. So there's a lot to do here, and we think a lot of that's enabled and empowered by Solana. So pretty excited.
Yeah, no, that makes a lot of sense. And I think in particular for proof of stake networks where, you have restaking, you have the needs for economic security, there's a lot of value towards those types of vehicles in that regard, and deploying that throughout the ecosystem in a really useful way. So that's awesome. I guess because we're already, kind of touching on that point, from a vision perspective, how do you think about supporting sort of the Sol ecosystem and others throughout this with this vehicle and with, say, staking and other sort of mechanisms?
Yeah. So ultimately, our mission is to bridge TradFi and DeFi. So you look at our logo; it looks like some kind of bridge. And we think that's going to be a maybe a decades-long, multi-decade-long endeavor. And coming from Kraken, actually, that's one of Kraken's kind of, key themes and monikers is bridging the, the two systems, building the bridge. And so we are doing that, we think, in a fairly unique way, in that we want to bring capital directly from TradFi into DeFi. And then we want to bring DeFi returns from DeFi into TradFi, right? So we're kind of providing this two-way bridge. And so ultimately, what we're doing today is providing a very simple vehicle for investors to get access to SOL and, better yet, SOL accumulation, right? So rather than just a SOL ETF or just kind of sits there, we are actively trying to grow SOL per share.
And I think that's actually a really good point to touch on. I mean, maybe Parker, if you want to explain sort of, there's obviously a lot of ETF applications in the works right this second, but what might say separate, DeFi Dev Corp from, say, the Grayscale SOL vehicle?
Sure. So, and then I'll loop back to your other question.
Yeah.
So, we are an operating business, right? And so our SOL metric is SOL per share growth. So my bonus, the entire executive team's bonus, the entire non-executive team's bonus, you can go look at it on our website, is all predicated on specific levels of SOL per share growth. And earlier this week, we released guidance. So our North Star is getting to 1 SOL per share. We think we can get there by December of 2028. And we've got a more medium-term target over the next 12 months. And so all the activities that we do, whether that's, running the validator, the new franchise model, things like that, are all in support of growing the SOL on the balance sheet. So we, I believe it's over the next 12 months, are going to try to grow SOL per share by about 260%. And so, the ETFs, they can stake their SOL, and they probably can't stake all of it because, they have to maintain some liquidity for creation and redemption. But, there's going to be a little bit of growth there, I don't know, 5% or something after fees a year. But we want to grow the SOL on our balance sheet a lot faster. Again, over the next 12 months, we're targeting 261%. So that's kind of the key differentiator. I'd say like the staking yield or maybe even the ETF yield is going to be like the risk-free rate. And then if you believe in the management team and our activities, then you might be willing to pay up a little bit, a bit of a NAV premium to get hopefully this higher growth. And so that's the key differentiator between us and, say, an ETF.
Yeah, I mean, it makes a ton of sense. And I think that's kind of the most interesting thing about the SOL, sort of treasury vehicles is there's more that you can do. There's more that you can participate and be active in versus, say, just a pure ETF. Obviously, different risk profile, but I think net over net, supports more activity that just lets you do more interesting things and let's call it Wall Street and, Main Street investors get access to in a more simplified manner without necessarily going on chain themselves. As much as, we're DeFi maxis, it's cool to see other vehicles as well.
Well, and to your question earlier, our goal right now today is providing this really easy one-click vehicle for TradFi investors to just be like, oh, I want exposure to SOL, buy it. You can buy it in your Schwab account. You can swipe it in your Robinhood account. But our hope is, and it's kind of how it's kind of playing out is really cool, is we want to educate these investors, these TradFi investors on the Solana DeFi ecosystem. And so, in our investor calls and like when we raised the most recent convert with Cantor, we probably sat on 70 calls with different hedge funds and like, larger institutional investors, QIBs. They all had at least 100 million in investable assets. And these guys were asking, most of the conversations were about SOL. We'd say, hey, we're the fastest, we believe we're the fastest way to accumulate SOL. And they're like, great. So tell me about SOL, right? And they were like, we know about Bitcoin because we've listened to Michael Saylor, but we don't know about Solana. And so we get to, in our small way, help spread the Solana gospel to all of these investors. And our hope is, yeah, we'd love them to buy our stock or, buy the convertible bonds or whatever other investment instruments we have. But our hope is, as with all of us here, right? We bought our first SOL. Maybe we didn't know much about it. We bought a few coins and then we started to go down the rabbit hole. How does it work? How does proof of history work? How does DeFi work? And then you start to dig in, peel back layers of the onion. And before you know it, you're like, yield point farming on one of the interest rate protocols, right? Or something crazy. And so our hope is that a lot of these guys, these hedge funds, they start to go down the rabbit hole themselves. And hopefully over the next couple of years, these guys start making markets on Orca. They start providing liquidity on Camino. They start trading perps on Drift. And then before you know it, these big hedge funds are full on DeFi degens. And that's how we kind of like bring capital into the DeFi ecosystem.
Yeah, it makes a ton of sense. And it slides into a lot of the work we're doing with Switchboard where, we're really trying to connect the off-chain world, with the on-chain world. And, on chain and bring not just that data, but also help bring new protocols, new users, funds, whatever it might be, and giving them access or some way to bring that activity over to DeFi. So it's super exciting from our perspective. And I really love what you mentioned earlier about the collateral side of making that accessible and bringing that on chain as well. I don't know if you want to chat more about sort of your partnership with Bakkt and sort of what that looked like, as well as, what you think kind of the opportunities are there. I have a lot of thoughts, but want to give you the floor.
Sure. I'll say a few things, but then would love to hear your thoughts, because you guys are definitely like at the forefront of like connecting these worlds from a pricing standpoint, which, pricing is everything. So, the partnership with Bakkt, it really sprang out of actually the partnership with Kraken. Again, our entire team is ex-Kraken. Most of our board is ex-Kraken. And so when we found out about, X-Stocks, we basically, begged them to add us to that initial batch. And so they eventually did, which was great. So, I think that's just the beginning of the unlock here. And our hope is that over the coming years, there's other types of securities that we want to launch in the future, and more offerings of, more offerings. Our hope is that over time, maybe we could actually IPO a new type of security, whether that's a preferred share or another convertible bond, or, just anything. Maybe instead of IPOing it on, say, the Nasdaq, or, trading it in TradFi markets, maybe we do it first on DeFi, some kind of launchpad or something. And then we need Bakkt to go bridge it the other way. Maybe it's like, hey, the Nasdaq investors want access to this thing that we just natively launched on chain. And so, like, can you help us go bridge it back? And I think it's just like, that may just make sense, right? Like, DeFi markets trade 24/7, 365.
When you think about it, right, the treasury management companies in some way are kind of that. You are kind of bringing the crypto native asset over there, and certainly the ETFs are, but I think one's more interesting than the other, in my opinion. So I mean, that makes a ton of sense, and I think that also speaks to the Solana narrative. Obviously, you hear Lily and everybody else talk about internet capital markets, but ultimately, the really interesting thing is if down the road, right, you can have price discovery for new things happening entirely on chain, and then giving people access on the other side. Start with the open sort of protocols and then go for sort of the closed loop environments.
Yeah. And actually, on a VWAP basis, so volume weighted average price basis, price discovery absolutely for our stock still happens on the Nasdaq. However, on a TWAP basis, time weighted price discovery today happens in DeFi. And that's because the Nasdaq is closed for the majority of the time, right? It's open for the 8-hour or whatever window, 5 days a week, except for holidays. So it's closed, whatever that is, 16 hours a day, roughly. And it is closed on the weekends. And so for those periods, price discovery is happening in CeFi and in DeFi. It's not happening in TradFi. And so I think that's pretty cool. I mean, again, most of the volume is still on the Nasdaq, but on a time basis, we're already here. Price discovery is already happening in DeFi.
Yeah, no, I mean, it's been awesome to see. And I think, that's only going to grow. I think that the other interesting thing is how much price discovery moves from, say, centralized exchanges over to DeFi protocols. And I think you're going to see more and more coming to DeFi. And as you have that, particularly with RWAs, where there is still going to be substantial liquidity on the TradFi side, you introduce a big need for oracles to reflect that and bring that data in a safe, secure, verifiable way on chain. So we're excited to work with you guys and many others on that. And I think that's ultimately the vision that everybody here in crypto is working for, is to really make, sort of internet capital markets and make, a more efficient, better financial system that people can use. So we're really excited for that. And I think, you guys are pioneers on that in many different ways. I think you are the first sort of tokenized treasury management company. Is that right?
That is true. I believe there's also X-Stocks has MicroStrategy as well. But we're certainly the first Solana one.
Yeah. I'd also just be curious from in the short term, how those kind of conversations, to the extent you can share, how those conversations have gone on, say, the institutional side and with regulators and with others, and sort of what the reception has been. Because I think, being a pioneer and sort of the TradFi side for this, it's not as easy as people think. Conversations take a lot longer. There's a lot more barriers in many different ways. So I'd just be curious, to the extent you can talk about it, how the reception has been.
Reception to just what we're doing in general, or to the X stock, or
both?
Cool. Yeah, I think it's just, it's very new, right? Thankfully, Saylor really paved the way. So like, I can't imagine what his conversations were like, especially, he started it kind of in a bull market. So that certainly helped. But then when he was doing it in a bear market, and I'm sure all the corporate guys were like, what are you doing? And he's just like, doubling down, tripling down. I'm not fucking selling, right? Like, man, kudos to him. So it's certainly easier here because we've got something to kind of pattern match off of. But it's still a very new thing. And, when we were, I'll circle back to the convertible bond raise, like when we had investors putting in orders, a lot of them were putting in just like little small, token amounts relative to their size. And we know they can do much larger size, but it's just like this is such a new story. Like, we like it, we like what MicroStrategy has done, but like, you guys are smaller, and Solana is like, I don't know anything about Solana. So it's definitely, running uphill, but I'd say we're able to run uphill rather than having to like rock climb or something, which is, I think, what Saylor was doing. So, and then on the regulatory side, I think regulators are much more constructive. It's certainly not balls to the wall. There's certainly still rules, and you got to get everything reviewed, and there's a lot of comments. But I think there's definitely been a tone shift, and it's like, hey, we want to make sure that the US is the crypto leader of the globe, rather than we got to shut this thing down to protect our existing capital markets. So that's been great to see. And hopefully, we never go back to the days of Gary Gensler.
Yeah, no, it makes sense. And I think everybody in the industry or most people feel the same way. So, yeah, I think from our side, one of the interesting things is what it's going to look like in the future. And I think we're entering a phase where, both kind of coexist at the same time, just to your point, on different liquidity time periods. I don't know when we'll get 24/7 equities trading, but something tells me, there's going to be a lot of resistance from traders and other folks in the TradFi world to give up their weekends for it. And so maybe there's a world where, to your point, beyond the overnight ATSs, you have 24/7 trading of things via platforms like Bakkt in sort of a more standardized way. And then when that's not happening, you have vehicles, whether it's oracles, whether it's traders arbing things, to sort of bring that price discovery that's happening on TradFi over to the DeFi protocols as well, or at least some level of reactive liquidity.
Yeah, absolutely. I mean, and it doesn't take a lot of capital to, to keep these things in line, right? It can take one or two active players that can just recycle things. So it's not like, oh, you need billions of dollars of arbitrage capital or something. It's just like, you need one group that like can recycle really quickly, and these things will stay in line, which is pretty cool.
Totally. Yeah. I mean, I think the most interesting thing is going to be what volumes look like. That's kind of the asterisk, I think, for a lot of people is there going to be continued demand for this stuff on chain? And I think between that and a lot of the other protocols that are being built on top of those base primitives, I think, there's a good chance you see a lot of volume growth on the DeFi side there.
Yeah, for sure.
One of the interesting things I wanted to touch on is, related to this stuff, a lot of the institutional and TradFi side doesn't really have access to DeFi in the same way that crypto natives do, regardless of having access to the underlying tokens, whether it's via treasury management companies or ETFs. The name of DeFi Dev Corp is DeFi Development Corp. I'd actually be curious, to the extent you can share sort of what you guys think about expanding DeFi participation. You were the first to do an LST, I think. And, we saw some of the announcements with some of the restaking providers. Maybe to the extent you can talk about that, would be curious to hear more about your perspective there.
Sure. Yeah. So, I mean, we provide kind of a nice active management team, if you will, to get exposure to DeFi in some ways. It's Solana long, right? It's Delta One Solana, but you still get exposure to some of these other activities. But I think what you're seeing more and more is a lot of the custodians that these guys use starting to offer more kind of direct DeFi integrations, right? So hopefully over time, as these custodians feel threatened by the self-custodial solutions, because you can always leave and go to Fireblocks or go to Squads or go to whoever and just directly integrate with DeFi and just use it. As more and more funds demand that, and the Krakens and the Coinbases and the BitGos of the world start to lose clients to self-custody, then hopefully they will add more of the DeFi integrations. And so enable these Wall Street traders to just, have your Kraken account and just go in there and be able to, do a Solana stake loop strategy, or to run some type of basis trade using the perps, or, yield point farming, or, whatever. And so I think there's going to be some forcing functions that will kind of more tightly couple these things. But in the meantime, these investors can outsource essentially to us, and we'll do a lot of this stuff. Well, we'll do the things that are Solana long. We won't do point farming, but they get at least some exposure to DeFi activity for sure.
Yeah, no, that makes sense. And also, I think the validator side is a huge part of the story. There aren't that many folks that even on the institutional side, right, run their own validators. Most just stake to another one. And so I don't know to the extent you want to talk about that, but I think it's actually really cool to have, a core team and a core competency around that beyond just owning the underlying.
Yeah. So, running the validator is great because it's basically allows us to be vertically integrated. So rather than outsourcing and paying a fee to a third party, we can just collect all the fee ourselves. And we run some validator mods that do allow us to get a little higher block rewards. We're not sandwiching or anything like that, but there's some other things that you can do to increase your yields a little bit. But then I think the other potentially big unlock is enabling third parties to stake to us. And so some organizations, they want to stake to a public company. They want that rigor, PCAOB accounting, SEC reviews, audits by, an accounting firm. And so they would prefer to stake to a US-based, US-listed public company. And so we can collect some of the stake from, for example, some ETF providers and other large institutional stakers. So we think that's an important part of the value proposition is people that want to interact with us, with our franchise, they want to get exposure in lots of different ways. So we have lots of different offerings for them. If they want to hold SOL directly but want to be involved with us, great, they can stake to us, or they can use our LST too. So it kind of just rounds out the offering and makes us more holistic and complete, I guess.
Yeah, no, I think that's a really good point. And I feel like, you look at the Coinbase validator commissions, and they are very, very expensive compared to others. And I think there's a good reason for that. To your point, having sort of the scrutiny that comes with being a publicly traded company, I think has benefits in some ways. And, that's certainly one of the components. And it's cool to see you guys, sort of pioneer there on that. And, I think in some ways, there's going to be more growth on that sector. It feels like than some of the other things. Just because as somebody who's a staker, right, there are two people, right? There's ones that are maximizing for yield, and there's others that are sort of maximizing for security. And institutional capital, I think, is generally a bit more risk averse than, let's call it on-chain capital. So, if that share continues to grow, then you'll have that. But, I can't touch on that point without, also talking about sort of how DeFi Dev Corp or others, think about sort of the degen opportunities, if you will, on crypto. So I know, obviously you have a very rigorous process for evaluating new opportunities, but maybe you can walk us through, what are the sorts of things that you guys are thinking of beyond just running the validators, maybe on the restaking side, or maybe LPing, other things that are common in DeFi, but, are viewed at a different risk profile than say trading perps, as an example.
Yeah. So We do stuff in DeFi. You can look at our LST, and we are the majority of the LST balance there, and you can see all the places that the LST is being used. So we do some restaking with Fragmetric. We do some interest rate stripping on RateX and Exponent. We do some stake looping on both Camino and Drift. It's a small piece of the portfolio, right? So we want to risk manage the smart contract risk, of course, and then just the other components of risk. When you're doing one-to-one Solana stuff, there's like not a whole lot of price risk there, but we're not like borrowing dollars, or dollars aren't in that mix at all. But we are doing, to the basically the fullest extent that we can on a, again, Delta 1 Solana long basis. So even if the whole thing blew up and it all went away, it wouldn't be too catastrophic. We're doing like a little bit less than 10% of our balance sheet across all of DeFi. So each protocol is, much less than 10%. But we think we really need to put our money where our mouth is and be involved in the ecosystem. And we hope to grow. Well, certainly we're going to be growing as we continue to buy more SOL, growing the amount of SOL that we put in, but we also hope to grow the allocation. And over time, maybe we can approach, 50, 75% is active in DeFi. I mean, as these smart contracts get, more and more hardened, and we feel a lot more confident that there's no bugs hanging out, then, we'll allocate more capital there. So we definitely are putting our money to work, but in a risk managed way.
Yeah, it makes sense. I mean, I think it's interesting that you guys are actually doing that. To me, it's always been, and again, this is just my opinion, not financial advice. It's kind of been the unique opportunity for sort of the treasury management companies is to be more active, deploy it within the ecosystem, and give people a differentiated opportunity or access to differentiated opportunities that otherwise aren't available, with the economies of scale and rigor that come with being a publicly traded company. So, excited to work with you guys on a number of fronts on there, and also excited, on the restaking side. You talked a bit about that. I think you might be the first treasury management company as well to sort of engage in, even if it's somewhat limited, in restaking.
I mean, it would seem so. I don't sit on the boards or, in the management conversations of the other teams, but yeah, it would seem so. So I know you guys are using the Fragmetric FragSol, I believe. So I guess we're a small part of the NCN there.
That is true. DeFi Dev Corp is helping secure the protocol and network. So it's exciting to see, and it helps build a safer DeFi ecosystem for everybody involved. So I think, as restaking opportunities sort of grow, but more importantly, as more offerings and protocols are built on top of those primitives, you will have more opportunities to do so.
Yeah.
And this is not speaking to you guys in particular, but, I kind of have an internal thesis that I think at some point, the treasury management companies will build their own opportunities, build more primitives beyond, having their own LST in that. But, who knows, right? I think we're still really early, but it's something that I could certainly see happening at some point down the road.
I mean, development is in our name.
Yeah. But yeah, so it's really exciting. And I think on, go ahead.
I was gonna say, I'd love to maybe turn around a little bit on you, Chris, and hear how you guys are thinking about the opportunity from like, hey, you've got this publicly traded vehicle now on chain and this partnership. Like, what are you really excited about from the Switchboard side?
Yeah, so I think one of the biggest things that we see is just the RWA narrative and, protocols and people building products on top of that. I think you're going to see in some way, shape, or form every sort of traditional asset traded and financialized. And I think crypto is just kind of the fastest horse, the best rails to do that in a global sort of way. It's not just about, tokenized equities. It's also for us, hey, can we bring access to this data to build price feeds so that, for example, perpetual swap platforms or futures platforms or lending protocols or others can more easily support this and have that composable throughout their ecosystem. So we've worked with a few protocols on that, not just on the Sol Eco, but on other ecosystems. And we kind of see those opportunities growing across the board. I think from the Oracle side, the other thing we're really interested in is really high speed oracles to reflect that and bring a more efficient market. So one thing that, you've probably seen and others have seen is that for DeFi derivatives, speed does actually matter. If you have an AMM that's effectively on the other side, setting the price for a lot of users, you need a fast oracle so that your LPs do not get picked off. So that's a really important consideration for us, and that's something that we have a few things in the works that are being optimized on that front for our users and for our community. So I'd say broadly speaking, sort of RWAs and speed. From a grander vision, I think the RWA side is just massive, and there's going to be a lot of opportunity within crypto for that. The other thing as well is I don't say the original, but sort of the still the most popular DeFi use case is borrow lend, right? From a TVL perspective, even if perps dwarf it in volume, from a TVL perspective, borrow lend is still sort of the king use case. As you bring and get access to more collateral and more assets, and that comes on chain, the lending protocols will need some way to price it. They'll need some oracle for that. And they'll be able to support new collateral, new assets, and new things to expand the total amount of TVL and the total amount of assets that are available to be used in these ecosystems.
Yeah, makes a lot of sense for sure.
But yeah, that was a bit of a rant, but that's a lot of where we see things going. And from the Switchboard side, at least philosophically, the reason we started it was we think permissionless finance needs permissionless data feeds. And there are 10,000 new assets on sort of the launch pads being created, over 10,000 being created every single day. You cannot support that manually. It is physically impossible to devote that much time to reviewing every single thing and setting up each thing. So you need to have permissionless, customizable software that ultimately the end user or AI, right, in some way, shape, or form, can use to create and support that. So I think number go up in terms of the number of transactions, but also just the number of assets that are going to be out there available to use and access in DeFi in some way, shape, or form.
That makes sense. How do you guys think about, like from the RWA perspective, I think one of the interesting next, so obviously stablecoins are like the #1 RWA, and it's like, massive and whatever. They're being talked about by the president now. But as we're starting to move up market, right? So we're starting to add like treasuries and like kind of moving out the duration curve. And then now kind of coming in from the other angle, it's like, well, now we've got like equities kind of trading on chain too. So we got like higher risk assets. But I think there's probably an area for like new markets around like private funds, private credit, that kind of thing. I know there was, I believe it was the Apollo real estate fund that's been partly tokenized, or one of them been partly tokenized. So how do you guys think about providing oracle feeds for assets that maybe don't have good frequent real world pricing? Maybe it's like a monthly valuation or something like that.
Yeah, so this is where I separate kind of and they're related problems, but really they're two different problems. One is sort of the data delivery side and connecting real world data and off-chain data on-chain. And then two is sort of the risk management, pricing, and fair value side. You can have the best model, the best thing in the world, but ultimately if something is illiquid, there aren't always great ways to price it. So that's just one of the challenges that all these different vehicles have to deal with. Now, going back to sort of the original point that I was saying, where the largest DeFi use case is borrow lend, to the extent that you have those vehicles and instruments, one of the things we get asked and people talk about all the time is, hey, I'm an LP in XYZ fund. Can I borrow against my fund position? And for, let's call it liquid hedge funds, that may be less of a concern. You can withdraw your capital. It's easier to get in and out. But for, say, a venture capital fund where, assets are locked up for years on end, that potentially becomes an interesting vehicle, right? Where maybe there's a way where if you can bring that on chain and you can have some sort of mark there determined by auditors and other folks, you can have a new vehicle where you can unlock that credit and unlock the opportunity to have some liquidity on that in a way that wasn't previously possible before. So, from just a steps, I think, yes, everything will be tokenized. Everything will be tradable on chain in some way, shape, or form. But the short-term sort of clear kind of immediate opportunity that I think is more on the borrow lend side around bringing a lot of that on chain. On the other side of it, it's issuing the private credit. So, you talked about the Apollo vehicles. You've seen, I'm sure, protocols like Maple and others that, effectively offer access to private credit on chain, Goldfinch, there's a million other ones. I think you're just going to see more of that. Why? Because if you have internet capital markets, if you have this massive distribution of a global user base that can now access and use this versus just people in, a few developed countries, it just opens up the opportunity. And, quite frankly, capital is capital, right? If somebody is not going to be hands-on, which, a lot of debt capital is not, right? It's just you're taking a loan for your business to have working capital, say to fulfill orders, just as an example. It doesn't really matter who it's coming from. You just want the best rate possible. Again, as long as it's compliant, all asterisks are checked off. So we kind of think those sectors are going to grow dramatically. And I think that, as well as underlying spot liquidity, are the things that once you have that in place, then unlock the other use cases, right? If you have liquid 24/7 spot markets, then you can start to think about, hey, can we have liquid 24/7 perp markets on it? And maybe the perps will come first in some way, shape, or form. People have certainly tried it, and I'm actually extremely optimistic on that. But at some point as well, the spot market is going to catch up because it needs to. And that's whether it's on the TradFi side or whether on the crypto side with the wrap versions of those.
Yeah, it makes sense.
So yeah, I hope you enjoyed the TED Talk. But
yeah, no, that's great. It's very exciting, and we're here for it.
Yeah, and I think the other thing is just where those new opportunities will be. Some of it I think will be the same, right? As in borrow lend, it's always going to exist, right? People will always need to borrow or want access to credit in some way, shape, or form for a million different reasons. I don't see that changing, but how it looks might change, right? And there's a world where, for example, maybe with the proliferation of, say, permissionless vaults, the majority of activity in borrow lend or in private credit or in some of these other instruments happens through, say, DeFi vaults. And I'm not saying that's going to happen, but there's a world where maybe
Sure.
It grows substantially versus what you'd think of in kind of the traditional debt issuance manner. So, and also on the crypto side, right, you kind of see different things taking different approaches, both from a risk and yield opportunity side, right? Like on the borrow lend side, you have traditionally these massive, sort of shared pools, but now with vaults, you can kind of isolate the risk, and so there's less issues in some ways with taking that approach, and it opens up the design space to support a lot more than you otherwise would.
Sure. Yeah, I mean, you can even, one way to price it is you just create multiple vaults with different parameters on a given asset, one of the Apollo funds or something, and you just let the market decide which ones they prefer. And so the market's kind of giving you a price in terms of the risk of, say, in a liquid vehicle and being willing to, say, loan dollars against that. So anyways.
Yeah, no, I mean, it makes a ton of sense. And, again, from the Oracle side, it's permissionless infrastructure. It's there to just help bring those marks, that data, whatever that end user needs or wants on chain to facilitate all that. So we're happy to support it. We're happy to work with you guys and many others on making that vision a reality, not just on Sol, but on a lot of other ecosystems. So, I think it's that to me is kind of the really big opportunity that's ahead of us in the short-term future for DeFi.
I'd love to hear a little bit about y'all's thinking on non-price related data feeds. So one example could be like the proof of reserve, proof of attestation thing, but there's other ones, right? Like private individual credit scores. There's all sorts of other data feeds that could be then financialized. I'd love to hear your thoughts on that.
Yeah, no, we're actually super excited. So we do have some offerings in the works on that front. From our side, we think of it from the perspective of what adds the most value to the end users. And so, if all you're doing is signing an attestation that somebody else is attesting to, it's a little less interesting. Now, if you can provide a way to have, let's say, a cryptographic proof of reserves that is real time updated and is trustless in the sense that you can prove every single component of that step and chain reaction to prove that the real time balance is XYZ, that's a really interesting kind of unique concept, right? Because if you think of traditional public companies, right, everything is done sort of on a quarterly basis. Well, what if you had a world where everything was done on chain and it was real time and publicly accessible by people? And again, there's a lot of asterisks there. There's a lot of challenges to that. There's a million different questions that opens. But I think that's where the world is really moving to. So yeah, I mean, absolutely. I think from the other side, though, from a data feed perspective, and sort of all other ways of bringing whatever the arbitrary data is that's needed on chain, it really depends on the use case. And so there's a question of, say, if you have permission credit markets, right? do you want the Oracle bringing that credit score on chain, or do you want to pre-compute a bunch of things off chain and only bring that final attestation on chain? I think a lot of those things are still being worked out as to the best approach that both balances UX and also balances privacy and security. Maybe you're okay with a credit score being on chain. I think a lot of people actually aren't. And there are ways to use cryptography to make it so that it is secure. But, again, it goes back to that earlier question of, is this something that, people would necessarily feel comfortable with in either way? And I think TBD.
Yeah. It's very interesting. I'm super excited for this because I think a lot of this stuff is accelerating and will continue to accelerate as, there's a little bit more friendly regulatory environment. So we're not focused on fighting the regulators, but we're like focused on building.
Yeah.
And it is this slowly then suddenly situation, which is pretty cool. So yeah.
Yeah, no, I mean, I think it's opening up the door, and you're already seeing it with, a lot of the products that are being built. So, yeah. And I mean, stablecoins are kind of the obvious one, but it really is a tide that lifts all boats, right? If there's more crypto native capital, if there's more crypto native assets out there, then, it's one step removed from accessing the ecosystem versus, let's say it's stuck in sort of the traditional finance system. You're kind of two steps, right? First, you got to get on chain, and then you have to access it. Versus if it's already in stables, you're only one step away from being part of those ecosystems.
Yeah, that's true.
So, at the very minimum, the way I think of a lot of this, and just from even a career and sort of high level perspective, worst case scenario, we're just making TradFi more efficient. We're making the world more efficient, and everybody can save some money in their daily financial transactions. But at a sort of more philosophical level, right? If we can enable internet capital markets, if we can enable a lot of these new use cases to come with crypto, and enable sort of sovereign, we have self-sovereign money. What if you have other components on that? That's interesting. And, it's, hey, why'd you get involved in this space? Why are you building DeFi Dev Corp, right? Why are you doing these other things? And at least from my perspective with Switchboard, and some of the work that we've done there, it's to really help grow the on-chain economy and really help bring a lot of the activity that you see off-chain, on-chain.
Absolutely. Yeah. I mean, that's just, it's so exciting thinking about where we're going and like this vision of a global capital market that's completely permissionless and, self-sovereign. So anybody, anywhere with, a Starlink Mini, I just got one of those. They're freaking sweet, up to a battery and a solar panel and go anywhere. With a little Starlink Mini, like you can run, in a MacBook, you could run a global macro hedge fund from a little village, or a fishing boat or something anywhere on planet Earth. And the kind of the American dream of like, property rights and individualism and freedom, being able to export that to the entire world. And doesn't matter where you're born anymore. You have access to good money. You have access to Bitcoin. You have access to free and open financial systems to use that Bitcoin or any money that you want to use. Like this is the light at the end of the tunnel is starting to be there. It's no longer a dream or a vision, but it's like, oh, I now see the 10 steps that we got to take to get there. And there's like line of sight to getting there. And that's just like, it fires me up. I get so amped about it. And super excited for the work that y'all are doing, and y'all's way to help, create that vision or create that future rather. So I don't know.
Yeah, we're really excited for that. So I guess on that note, we're coming somewhat to a close. I don't know if you want to say a little bit more about what's next for DeFi Dev Corp beyond, those targets and guidance around getting to that share soul level per share.
Yeah. So, I mean, look, ultimately our hope is to use these treasury vehicles, both ours and then, the franchise model that we announced, to basically bring all of the DeFi assets, the important DeFi assets into Solana DeFi assets into the TradFi markets all around the world. And then from there, we want to slowly suck that capital into DeFi. And so that, hedge funds all over the world and family offices all over the world and high net worth individuals and whatever are deploying their capital on chain. They're lending their dollars out. They're maybe borrowing against their Bitcoin or borrowing against their Sol. And so I think my hope is that in the future, when we start talking to investors, DFDV is a piece of their overall DeFi portfolio. And these like blue chip, 100-year-old hedge funds that, you know, have been investing in equity markets for, you know, a long time are now like, you know, we're having conversations about like, you know, what should the weight be of DFDV versus a, you know, Camino borrow lend position or an Orca LP on this asset, and we're doing this and that, and kind of DFDV is part of like this portfolio where that they're managing on chain. That would be kind of the dream future, because that means potentially trillions of dollars of additional capital are being deployed on chain, which is, you know, just super exciting. So that's kind of what we want to do. That's where our we're going long term. And so hopefully it'll be, you know, well, I can guarantee you we will continue to move towards that mission, and there'll be more announcements in progress towards that overall goal over the next months, quarters, years, and decades.
Yeah, no, super excited for that, and a lot of the other things, and, you know, excited to be supporting that vision and working together on the Switchboard side. So absolutely. I guess on that note, you know, we have a few minutes left. Wanted to open it up to questions from the audience. I see some comments. Some folks asking.
Happy to stay over a little bit too. I know we started a few minutes late.
When will liquidity rise on DFDVX?
It's a great question. Please go provide some liquidity, folks. You know, unfortunately, there are specific rules around companies providing liquidity or paying market makers to provide liquidity on their own stock. You know, it's an SEC thing. So we aren't, unlike a token project, we're not able to like buy a bunch of the, you know, the tokens and stick them in ourselves, or we can't like send Wintermute a check to like go provide liquidity. So it's kind of like asking people in the community, hey, like, please jump in. You know, I will say, if you look at the main Orca pool right now, you know, the yields there are pretty high. So if you can do a hedged position, you know, you can short the perps on our stock, and you can manage that, you can make quite a bit. So I don't know, here's the bat signal, like, go provide liquidity, please.
Nice. We had a shout out from Keone DN. Nice. For Monad. Let's see. Somebody asking if they could throw a visual. Sure, why not?
Got to be careful.
Yeah. We'll give it a minute. See if there's any other questions. Cool. Well, if there's no other questions, then we'll let everybody get back at it. Parker, where's the best way people can find DeFi Dev Corp?
So you can check out our website, dfdv.com. We've got all our metrics plastered everywhere on different tabs on the site. You can also, of course, follow us on Twitter, DeFi Dev Corp. And yeah, reach out. I mean, you'll see we've got our DeFi Degens community. So I'm always in there answering questions, you know, responding to feedback. We try to be pretty engaged and active. So if you think there's a way that we can improve or something we should be doing, please don't hesitate to let us know, and we'll incorporate that into our thinking.
Yeah, I'd love to hear it. And on the Switchboard side, you know, if you're looking to build and you need an oracle, you need price data, you need data in any way, shape, or form, and help getting that into your protocol, you know, feel free to reach out. You can follow us at Switchboard XYZ, and you can follow DeFi Dev Corp at DeFi Dev Corp on X. So thank you, everybody, for joining us. And if you have any questions, you know, drop them in the comments. If not, you know, DMs are open, and both of us, I think, are happy to chat and happy to support, you know, the ecosystem going forward. Thank you, Parker.
Thanks, Chris. See y'all.
Alrighty. See everyone.